Hello, and thank you for joining us on today's Ask Andrew show, Canada's first Facebook live streaming family law question and answer show. My name is Andrew Feldstein, and I'm the principal of Feldstein Family Law Group. We have offices in Markham, Vaughan, Oakville, and Mississauga, and both myself and the entire firm practice exclusively in family law. Today, we're fortunate enough to have a special guest being Dale Barrett of Barrett Tax Law. They provide a comprehensive spectrum of tax law experience in areas such as cryptocurrency, net worth assessments, and tax litigation. Dale is here to speak with us today in a newer area of law about cryptocurrency and how it affects income for support and its crossover with tax law. So without further ado, Dale, welcome to the show and thank you for joining us today.
Hi, thank you very much for having me, Andrew. It's my pleasure to speak about cryptocurrency and tax and anything else that's associated. So this is going to be awesome.
So I'm going to start with one of the problems I see in family law is clients frequently come in, and when it's time to have a discussion about how to divide property, they regularly are under the false and misguided impression that it's only assets that are in Canada. And I think a lot of people may think rightly or wrongly that if they have cryptocurrency as an asset, they don't need to include it because they view it as being not in Canada. From a family law perspective, that's horribly wrong. And I wonder if that sort of bleeds into income tax law, that a lot of people think that cryptocurrency is harder to track and therefore they don't need to report any gains to CRA.
Well, we've got two kinds of people out there. There's the kind of people who know what they're supposed to do. They know the regulations, they know the law, they know when they're getting divorced or separated, they're supposed to disclose all their assets, including their cryptocurrency. And then I guess there's three kinds. Then there's the kinds of people who know this and intentionally sort of turn a blind eye, or they're willfully blind to the fact that they're supposed to disclose both to their spouses and to the CRA. And then you get the third category of people who don't know at all what they're supposed to do. They're completely ignorant, and they treat cryptocurrency like it doesn't exist at all. And they imagine that possibly since it's anonymous, so to speak, to a certain extent, and since it's out of the country, and since it lives in a little wallet that may or may not even be associated with their name, that they don't have to disclose it to anybody at all. So it just depends on who your individual is, who your client is, and whether or not they fall into one category or the other.
So from a family law perspective, the challenge we have is if I'm acting for the client and their former spouse is the one who has a cryptocurrency, such as Bitcoin, and their former spouse decides not to declare it. I have a picture, I have a client come in and says, Andrew, I know they have a lot of Bitcoin, it's worth a lot of money, and they didn't disclose it. How do we find it?
That's the difficulty. You see, on one hand, you may not have access to find it. There's no centralized registry where you can type their name in and figure out what their holdings are. They may hold their cryptocurrency with a company or with an exchange that's outside the country, and they may not be subject to being subpoenaed or being compelled to provide the information. Then a bigger difficulty, in fact, is that somebody can go ahead once they know that they're getting separated, and once they know that financial disclosure is being required, they can go ahead and they can ship their cryptocurrency in 3 seconds to some random person that they know elsewhere, and they may not have that cryptocurrency anymore. So it's a very, very difficult thing to nail someone down, and obviously you've got to rely on someone being honorable to a certain extent, because in many situations it'll be hard to compel them to be correct and honorable.
Well, one of the things we frequently do as family law lawyers is we look at the historical bank statements, credit card statements of somebody, and the easiest way of finding that cryptocurrency, if they fail to disclose it, is going to be seeing that they made purchases, typically in about a period of time around 3 years prior to the date of separation. But the real problem happens if someone bought that cryptocurrency 5 years ago, 10 years ago, 15 years ago, and they never sold it. And they're sitting on it and it could be worth millions. And we're just not looking far enough back to see that they bought it and the records don't exist. So I think what you're saying is in that scenario, there's a good chance that that person, it's not going to be discovered.
There's a huge chance that it won't be discovered. And similarly, even if you're in the position where you can find someone's bank records and you look at their Visa statement and you see they bought cryptocurrency 2.5 years ago and they bought a couple Bitcoin, they could have spent it by now. They could have done all kinds of things with it by now. There's no way to prove or it'll be very, very difficult and time-consuming and costly to prove that they still have any of it at all. So you've really got to rely on someone being honorable to a certain extent. If someone wants to, and that's the issue, not just with the family law aspect, but with the taxation aspect. If someone wants to be deceptive, there's a lot of different ways that they can use, and a lot of means by which they can become deceptive and hide their assets from the government, from their spouses, and so on and so forth.
So I'm going to peel this back one layer and say, would I be correct in assuming that if you have a certain amount of cryptocurrency that you're obligated to report that as offshore assets on an income tax return?
Yeah, good question. So the way it works on your income tax return is there's an obligation on the part of individuals who have more than $100,000 of assets offshore to record those assets and to let the CRA know on the T1135 form that they have those assets. And when we're talking about 100,000 of assets, we're not talking about current value. We're talking about cost price. So the difficulty is, if you bought 1 million Bitcoin at at a penny each, or you bought 100,000 Bitcoin at 16 cents each, and your cost price was $16,000, you're under no obligation to even file the T1135 to disclose that to the CRA. So if your cost price is that 16 grand, no one knows about it. The CRA won't know about it, and you don't have to tell anybody.
It's amazing with all the loopholes that the Liberals seem to be trying to close. They didn't decide that they should do something about cryptocurrency. In that sense of making you report based on the fair market value, for example, on December 31st, rather than your cost base.
Right. Well, it's the same thing for all other assets. It's the same thing for your properties. Same thing for your stocks and bonds and your other negotiable instruments. So it's always been that it's the cost price. So they're free to go ahead and change the requirements for the T1135, but to date they have not. So it is what it is.
So from my perspective, obviously looking at a tax return is critical. And this really gets into, from a family law perspective, we sometimes get into arguments with the other lawyer when they give us the summary of their income tax return. And we say it's not good enough. We want to see the entire tax return, because on the entire tax return would include, I believe you called it the T1135, which would include what type of foreign assets they've disclosed. Now, I see lots and lots and lots of family law cases where people fail to disclose foreign assets. So I wouldn't be looking at that as the great place that you're going to say your aha moment, because most likely if the person's honest on their tax return, they're probably going to disclose it on their sworn financial statement. But
by the way, let me just jump in for 1 second there. If you are looking at their T1135, and let's say they've been 100% honest in their T1135, there's going to be certain things that are not present. And I know we're talking about cryptocurrency today, but let's just talk about for 1 second here personal use property. So if somebody has a cottage, and they have a cottage, or they have a family home, or they have something that's not being used for business purposes. So let's say they were left by their father in some foreign country, an apartment that they visit once or twice a year. That apartment does not have to be listed in one's T1135. Okay, even if they don't visit it once or twice a year, as long as it's personal use property, it doesn't have to be listed. So just by looking at their T1135 form, you're not going to get 100% comfort when you're dealing with, a net asset calculation. You're not going to be 100% comfortable when you're looking at what kind of assets they do and don't have.
Well, that's a great point. One of the nice things with the family use exemption is usually the other spouse knows about it.
Usually they do.
They've been there. They tell you they forgot to include the condo in Florida, and it's pretty easy to deal with. Other countries, it's not as easy because there's questions of who actually owned it. But where we get into the risk that you're saying is someone bought the cryptocurrency a long time ago. They don't have to record it on their tax return. And then we take it a step further. A lot of people just don't record it on their tax return. And then we're really off to the races of how to prove it. And I think that's where the greatest challenge is for us, and probably CRA in dealing with that. And there are remedies that we can have with a court. And I heard you say, well, they may be in a jurisdiction that a court order, they're not going to care about an Ontario court order. And I see you nodding in the affirmative. There are ways to deal with that, because sometimes you can force someone to go get the information, and they have the fear of contempt of court here in Ontario. But that really boils down to, is there something that's keeping the person in Canada? If there isn't something keeping the person in Canada, then they may be more likely to play games. And to me, the first thing I always think of what keeps somebody in Canada are their kids. So if somebody has a really good relationship with their kids, they're more likely to, if caught, or more likely to disclose it than to flee. But if somebody has no kids or no relationship with their kids and the number is big enough, I mean, do you see experience of people coming in with cryptocurrency and they've had absolutely incredible gains to numbers that would blow people's mind away, and they say, I'm better off to get on a plane?
Oh, I see this all the time. I mean, I can't tell you how many of these cryptocurrency millionaires have walked through my doors and have disclosed to me what kind of holdings they have, and oftentimes a real serious part of the conversation is, what is keeping you here? Do you need to be here? No one knows about this right now. Can you leave? And then when they decide yes, they can leave, and that this is something that they'd like to discuss and think about it greater length, the question becomes, where are you going to leave to? And there's all kinds of countries that have no treaties with Canada, no tax treaties, no cooperation treaties. There's all kinds of places one could disappear to with their cryptocurrency and live a very, very nice life.
And if I was a family law lawyer and my client came to me and she said, I went on the joint family computer yesterday and I got something in from this broker about my former spouse's cryptocurrency, what could I do to freeze that asset? Is there any way that I can get a court order in Ontario that is even going to be able to attach to that asset?
That's a very good question. I mean, it depends where the exchange is. If you've got an exchange that's resident here in Ontario, then I imagine an Ontario court order would be authoritative, and that the people running the exchange would listen to this. Now, if you've got an exchange that's located in Russia, however, good luck. It's not going to happen.
And where do most people use an exchange? Because I would think as a consumer, I would be very nervous about using an exchange in Russia because, for the reasons that you're talking about, an Ontario court isn't going to be able to attach to it. I'm going to be worried they're going to take my Bitcoin from me.
Well, you see, that's a concern as well. And a lot of times, the security of one's Bitcoin or one's cryptocurrency assets isn't necessarily related to the exchange 100%, but it's also related to what kind of wallet they keep their cryptocurrency in. So some people have a software wallet, some people have a hardware wallet. So if you could, and a hardware wallet is much more secure. So if you're dealing with, an exchange that's in Russia or North Korea or somewhere where you don't necessarily have the comfort where you can trust the exchange themselves and trust the legislation and trust the local legal environment, you're going to want to make sure that you're at one of those exchanges where you can actually have the hardware wallet. So it is possible to be in a bad place, so to speak, and have your security at the same time. So you can have your cake and eat it too.
Can you explain to the viewers the difference between a hardware wallet and a software wallet?
Yeah, a software wallet essentially is, for lack of a better term, it's a wallet. It's a place where your cryptocurrency is kept, and you have a private key and you have a public key. Now, the public key is a long hexadecimal address. It's all kinds of letters and numbers, and people can use this address to send you money, to send you cryptocurrency. Then you have your private key, which is another equally long number, which you have to enter in order to access your cryptocurrency, in order to send it to someone else, in order to do any transactions. So a software wallet exists on someone's computer. It's got nothing but basically the public key and the private key. And if somehow someone were able to figure out your public or your private key, either by having a sniffer on the line or by some other technological means, they can figure out how to get your money out and they can access your wallet. A hardware wallet is literally, it's something like a USB key. It's a piece of hardware that you have to plug into your computer. And without that hardware, there's no transaction happening. So your cryptocurrency is locked, except if that piece of hardware is inserted into the computer. And that leaves the problem, what if you lose your hardware wallet? It's possible that you can have it water damaged, or you can lose it, and you can actually go ahead and lose your cryptocurrency as a result. So, but at least the nice thing with the hardware wallet is that it can't be hacked necessarily, or can't be hacked so easily by the bad guys.
Now, one of the things I always believe in family law is that I work in partnership with my clients, especially on cases where we're trying to find assets. So it sounds to me like common sense would be that if I have a hardware wallet, which is what you would have if you're in one of the countries like Russia, You'd want to be keeping that in a really, really safe place. Where would most people keep that hardware wallet then? Is it something they keep on their body, or is it something they put in a safety deposit box?
If you're, I don't think my father-in-law actually has one, but if you're like him, he's got a little USB around his neck, and he'll tell you that that's his decoy. The fact of the matter is, there's all kinds of places where people keep them. They keep them in bank safe deposit boxes, and of course, spouses can access those, and they keep them in safes at home, and they keep them above ceiling tiles, and they keep them in all kinds of places. So, it's hard to determine where one of these things would be. They're small, they're portable, and you could really hide one absolutely anywhere.
And is there any look to them that's different than any other USB key?
It's not exactly a USB key. You can look these up and you'll see they're just little tiny, they plug in by USB, and they're just little tiny devices that plug into the computer. And some of them are fancy and they're leather, and but they're all the same, so to speak.
Because one of the suggestions that I would be taking from this is saying to clients on a go forward basis, you should be thinking of during your marriage, was there something that seemed really important to your spouse that resembles a USB key? Because that would be one of the tell signs that there would be hardware.
Right, absolutely.
But even if you did that, what do you do with that information? Because how are you going to ever access that hardware key to see that it even exists?
Well, that's the thing. If you don't know it exists and you don't know where which exchange it plugs into or how to use it, you're out of luck. So
now, are people disclosing, in your experience, cryptocurrency as an asset? And what I mean by that is, I think of the client who is coming in and wants to borrow money, and they want to impress upon the institution that's lending them that, well, I have cryptocurrency, or a bank's looking at cryptocurrency as, well, that's nice, we can't really access it, so we don't count it as security, so nobody's disclosing it.
In my experience, when I look at my clients, the kind of clients I have who deal with cryptocurrency, they're the kind of clients who don't need loans. They don't need to borrow from the banks. They don't need to put up collateral or put up security. So I really can't even comment on that, because most of the people I see are people who put in $5,000 and $10,000 and $50,000, and all of a sudden it's worth $8 million. And these are people who are living off the cryptocurrency and slowly but surely converting cryptocurrency to fiat, which is cash, Canadian dollars, US dollars, and they're not in the realm of borrowing money.
So then that leads to my next question, because you just said they convert it to fiat. So if you have that hardware or that software key, and I believe the software key, the only way you can really find it then is getting access to that person's computer through a court order and checking the computer to see if they've been logging on. If someone had used a hardware key, would there be a record on the computer that there was that type of hardware key used?
Even if there was record on the computer itself isn't going to be authoritative. So you can come onto my computer and you can see that I've accessed Coinbase or accessed a variety of different platforms where I could trade my cryptocurrency. But without my private key, without that long code, you're out of luck in any case. So even if a court determines that, yes, someone's been using cryptocurrency, yes, it was used in this computer, and they get all the best nerds in the world to say, yes, the computer was used, and a hardware key was installed, and the software that's been used to do trading, they still can't figure out, without the proper key, without the actual hardware key itself, or without the private key, they can't figure out what kind of holdings there are.
Now, you also talked about the fiat a moment ago when you try to convert it to cash. So when you try to convert it to cash, is that going to leave a record? I would assume, depending on
that usually does, leave a trace. However, there's a lot of people I know who go ahead and they sell their cryptocurrency to an individual in a cafe, and that individual will give them $5,000 or $10,000 cash. And while they're sitting there, the individual who's selling the cryptocurrency will go and make a send. They'll send money to the other person's wallet. So this can happen in a cafe, and banks aren't involved.
So what you're saying is, if I have 20,000 in cryptocurrency and I want to convert it to cash, somebody may give me, as an example, 18 or 19,000 in cash sitting in a cafe and say, I want a premium for my troubles that I'm now taking your Bitcoin off your hands.
Absolutely. And there's a lot of people offering a premium so that they can give people cash and have it off the books. So that's the concern.
So you're telling me in that scenario, I may have no record of the person buying, holding, or selling.
Unfortunately.
And that gets to really, I guess, a lifestyle assessment where if I see that somebody hasn't worked in several years and they have no debt and they're living a nice lifestyle and their family didn't have money to give to them, you're going to scratch your head and say, well, money doesn't magically fall in somebody's hand. It had to come from somewhere, and have some sort of lifestyle assessment on it.
Right. Yeah, and the CRA does a lot of that. They do a tremendous number of net worth audits and lifestyle assessments, and they'll, exactly as you described, they'll look at the incongruency between someone's living conditions and lifestyle versus the amount of income that they declared on their income tax returns. So it's certainly a way to do it. But if someone's living a lifestyle that costs them $500,000 a year, they're declaring $50,000 a year, you don't know if they've got $2 million of crypto or $20 or $50 million of crypto. It's going to give you an indication that they're lying, but it won't give you an indication as to the quantum.
Well, what it does is it creates one stream. You're going to argue there's an ongoing income stream that should be used for support. The problem with that is they're going to say, well, it's no different than an investment portfolio in that I'm hoping there'll be appreciation, but look, last year it went from 20,000 to 3,000 for Bitcoin, and this year it's back up. So it's highly speculative, and that's only good for 1 year. Then it also counts for the purposes of equalization and net family property. And you get into the issue of the one who owns the Bitcoins is probably going to try and say, well, it was a business activity and I have to pay 50% tax on the gain, or in the alternative, a capital gain. And the other person is going to say, well, you never declared any income on that, so you don't get the notional disposition cost for that. And it also leads down to the concern I see in a lot of clients who would engage in this kind of behavior of being frightened to declare the Bitcoin on a sworn financial statement that gets filed in a court record, because the court record's public. And I frequently will tell clients now that if I go to court and I argue a motion or a trial, and the judge doesn't handwrite the reasons at the end, but types it up, odds are that's a reported decision that will be on Canley or on Westlaw. And if that's the case, clients are petrified that CRA may read it.
Of course.
And that's another reason someone might be concerned about disclosing it. I've even had some cases where people have said to me, Andrew, we really need to go to mediation or mediation arbitration because I think my client may become a lot more forthcoming with their disclosure if we have a confidentiality agreement.
Right.
Which I understand where they're coming from, but that threat is really concerning to these people when they go to court. And in fact, when we get to confidentiality, there was a recent court decision in Ontario dealing with Bitcoin because the owner of the Bitcoin wanted all of his holdings to remain confidential and not be included in the public record. And he did not want to provide unredacted statements for his cryptocurrency because when you give disclosure, the other side can just put it in the court record as part of the court material.
Sure.
What would be the logic, or what would be the concern of the person holding the cryptocurrency of having the full statement included in the record?
There's a lot of concerns that people can have. One of the important concerns is, and it comes down to whether or not you're treating your cryptocurrency gains as business income or as capital gains. So, for example, let's say someone is an active trader, okay? And they're trading actively, and maybe they haven't disclosed all their trades to the government. So what happens typically with an active trader is on a calendar year basis, whatever trades you've made, whatever income you've made, that's now profit. That profit you have to include in your statement of business activities. And you've got to go ahead and you've got to pay tax on that profit. Now, the next year, let's say your $1 million of profit that you made on Bitcoin, let's say the Bitcoin goes down to $500,000 next year. Now you've got a $500,000 loss. Now, the difficulty is if you're going to be realizing year by year profit and loss in terms of business income, you've got to pay income tax. You can't just defer the income tax. So here's the issue. So if you've made $1 million this year and you don't have any cash, you don't have any fiat, now you've got to go in April when it comes time to paying your taxes, and you have to go ahead and liquidate some Bitcoin. You may not want to liquidate Bitcoin in order to pay your taxes from last year. So a lot of people, instead of having it being considered business income, they like to call it a capital gain. They like to tell the CRA that they're just holding it, okay? But if the CRA were to see the true statement, and they were to see the true numbers, and they were to see the true number of trades and the true activity, then oftentimes what would actually happen is the CRA prefers business income over capital gains. Obviously, it's taxed at twice the rate. So the CRA, if they see people who are trading actively and who've got those kinds of positions in Bitcoin, they like to tell them in April, you better go ahead and pay tax on your last year's income. So the people go ahead, they have to liquidate, and then what happens is they go ahead and they lose the next year, and it becomes a point where you've got to now offset the losses against the gains, and it's a very complicated position where you've got to keep selling your assets in order to pay the taxes. So there's a very strong disincentive on people's parts who are actively trading to actually give proper disclosure and tell the CRA or tell their spouses what in fact is actually happening.
Or they try to hope that it's a capital gain and CRA accepts that.
Yeah, but when you're trading, you got a lot of these guys, a lot of my clients have software, for example, and they're sitting at their computer 8 or 10 hours a day, and they're trading, and they're doing hundreds of thousands of trades a week.
They're done.
Yeah, they're done. So once they say, yeah, I made $1 million this year, well, the CRA is going to say, okay, you made $1 million this year. Your taxes, just over $500,000. Now these people have to liquidate half of their Bitcoin to pay the tax, and it becomes a very difficult position for them to be in.
Now, the other place I see it from a matrimonial proceeding, if a person wanted to keep it confidential, I would assume one option for them, if they were honest with their former spouse and not honest with CRA, because maybe they thought their spouse knows exactly where the encryption codes are or knows about it, they could divide half of their cryptocurrency with their former spouse, I assume.
Sure, they could.
And there'd be no record of that. And that would be, even if CRA knew it, that piece would be a tax-free rollover, and the receiving spouse would inherit it at the original cost base, which becomes important to get the information to understand what the original cost base is. Because
right.
That information.
If you're contemplating divorce, or if you're contemplating separation, to make sure that you figure out what your spouse has in cryptocurrency assets. So yeah, so at least if they're not disclosing to the government, they do disclose to you, and you can get your fair share.
And that's a really difficult thing to do. Where spouses typically find out about the undisclosed assets was because the other spouse was bragging. So you have a spouse who's really proud of themselves, that they're saying, I bought all this Bitcoin and my Bitcoin is currently worth $10 million. And then they get the financial statement and they see no Bitcoin. That person is going to have a real hard time and is going to insist on digging and looking at records and talk about all the bragging and maybe even get some people that their spouse bragged to, versus the person who never said a word to anybody about the Bitcoin and just kept their mouth shut. Because if they did that, that spouse is going to come into my office, never mention Bitcoin if they hired me. And we're going to look, for example, at the last 3 years of bank statements and credit card statements. And if that person didn't buy in the last 3 years or repatriate through fiat, I believe you called it, you're not going to find any record of it. And they're probably going to be fine. But then the last piece that person has to think about is, it may be wonderful to have all this money, but if you start living a high lifestyle, then you have a problem too. I always think of the story a friend of mine told me, which is the guy comes to pick up his children on a Friday, and he had just bought a new 911. And by Tuesday, he received a motion to change from his former spouse, because the moment she saw him driving that fancy, expensive 911, she wanted something. And if you're busy cashing in the Bitcoin and living a big lifestyle that's far beyond your means, and you have to know, that's an invitation that former spouse is going to wonder, where did that money come from?
Right, and it's not just on a family law perspective, but from just a regular tax perspective. At the end of the day, if you want to hide your Bitcoin, if you want to play games with the government, you can do it. But when you're pulling cash out, there's only so much cash you can spend. There's only so much cash you can spend without being found out, without being conspicuous. You can't go into a Porsche dealership and buy a 911 in cash and get away with it, either from the CRA's perspective or from your ex-spouse. So one way or another, it's unless you're involved in organized crime, having $50 million in Canada in Bitcoin that you're going to cash out bit by bit may not be helpful to you.
Exactly. Dale, I found this to be really an interesting topic, and I learned a lot from this. I wanted to thank you for being on the show, because it was a real pleasure having you. For anyone who's interested in learning more about Dale and his practice, you can visit him on the web at barretttaxlaw.com. That's spelled BARRETTTAXLAW.com. And thank you again for joining us today.
Thank you very much. It was a pleasure.
And the next Ask Andrew show is on August 12th at 1 p.m. If you have any requests or ideas for future shows, please email them to us at info@feldsteinfamilylaw.com. And thank you for watching.